Hello, I'm Fred Farris with the Aspire Institute, and today I want to talk about markup and margin as it relates to general contractors and also how to calculate the right price for a project. The first thing we want to talk about is understanding margin. So from a business management viewpoint, margin and markup are not the same thing. A fixed markup is the percentage difference between a job cost and the selling price, while the margin is the difference between the selling price and the desired gross profit dollars that you want. And the truth is, in most cases, when our net profit is too low, it's because our gross margin is too low. Anytime that our average gross margin, and therefore gross profit, is at or below the same percentage as our overhead or dollars as our overhead, there's nothing left. So the problem is if our gross profit is, let's say, 12% and our overhead is 10 to 12%, that leaves us with 0 to 2% net profit, and that doesn't work. So the problem isn't usually cutting overhead or even increasing revenue. It's understanding the margin and getting the right profit on every job. Understanding, again, markup and margin. Margin is very different from markup. The math is different. The process is different. When we're using markup, we look at, a multiplier. So let's say we had a job cost that was $100,000 all in. It was our cost. We wanted a 20% profit on that. We would sell it for 120. But what is the actual margin on that? Is it 20%? Because it's not. It's actually 16.7%. So I want to talk about the math and how this works. So to calculate a margin, you take your revenue minus your production cost and divide it by the revenue, and that will give you the margin. So in that example, we talked about if we have a $120,000 sales price with a $100,000 cost, that gives us a 20% profit. That 20% profit divided by the $120,000 sale price is a 0.167 or 16.7% profit margin. So our margin isn't 20%, it's actually 16.7. And really what it comes down to is, what are we using to control our profit in our business, right? The issue regarding markup and margin is about which controls your business and pricing strategies. So using a markup that determines the price, but margin controls the profit and controls the markup. So you can adjust the markup to get the right margin. But you need to understand the difference between the two because it is very critical in business. So another way, or what I think is a better way to calculate your margin, is to do what's called divide by the reciprocal. So you determine the margin target that you're looking for, then you subtract that from 100 and divide by the reciprocal. So the reciprocal cost, right? So that same example, if we had a $100,000 cost and we wanted a 20% margin, we would actually take the 100 minus the 20% margin we want, which would give us 80% or 0.8. We would take the $100,000 divided by 0.8 and would give us a sale price of 125, which is a $25,000 profit, and that's a 20% profit margin on that job. So again, the math on this is important that we understand the difference because just using a markup could get us in trouble where we're not getting the margin that we think we're getting. Remember that markup is a small math step. It's not a business strategy, and a fixed markup doesn't fit a complex business with wide-ranging margins and variables like job sizes. So we need to be thoughtful about what markup and therefore margin we're achieving on each job. Because any pricing strategy based on a fixed markup with widely ranging margins always results in a lower margin due to life happening, right? There's slippage, there's things that happen. So we need to have a margin target that allows us to keep the profit that we're looking for on the job. Another thing to think about is as we're building estimates, we need to understand our true costs for the project. So I want to talk briefly about our cost structure. All right, we have our revenue, our total revenue for the month or the year. And then we have our production costs. Then after production costs, we have gross profit. But too often I see a lot of costs that are put into expenses for tax reasons. That's where they're appropriately supposed to be, but they're really job costs. So when we look through our production costs and make sure we're accounting for everything in the bid when we're building it, things like obviously materials and subcontractors, but in-house labor, the tax and benefit load, there's indirect and related costs. Even the sales and estimating costs need to be accounted for in that process. So once we have that gross profit, we then pay our overhead, and whatever's left is net profit. So if we were to put some numbers to this, what I see often is something like this. For every $1 million of revenue, we have production costs of $880,000 or about 88%, leaving us with $120,000 in gross profit or 12%. Overhead around 100,000 or 10% leaves us with $20,000 or 2% net profit. And I see a lot of times people will say, well, I need to cut my overhead or increase my revenue. But the real issue is that if production is taking 88% of our costs or of our income, we're never going to get there. What we really need to do is make sure that we're more efficient in our process. We're accounting for all of our costs, and we can lower that production cost as a percentage, which will increase the gross profit, and the difference will fall to the bottom line or net profit. So making sure we understand the true costs. I have an allocation key that we use here that I want to share with you, where we break down the different costs. You have income, which is the blue category. The orange is all the functional labor costs. So your field wages, the tax and benefit load on your field positions, your sales, supervision, estimating time, and the tax and benefit load on those positions, subcontractors, obviously, materials. And the purple is one I want to really focus on. This is indirect and related costs. These are other job costs that we need to account for in our project because those are costs. They're things that can change with taking on more projects. Those costs will go up or down. So we need to account for them in the project. Then the yellow is what we consider true overhead. So office wages, the tax and benefit load, the general admin expenses, and marketing expenses. But really understanding what costs need to be accounted for in the bid so that we can cover all of our costs and get the appropriate margin on that is important. The other thing that I want to talk about is pricing per job, right? Job mix and margins are tied very closely. Using a fixed markup across the board or margin across the board for all project types isn't necessarily the right way to go. You need to make sure you're applying the correct margin to each project type because every job should have a margin appropriate for that job. And what I mean by that is there's a certain amount of risk for each job. Every kind of job is a little bit different, so we need to understand that. Smaller jobs, a small bathroom, for example, would need to have a higher margin than a kitchen, and a kitchen would need to have a higher margin than a whole home or an addition or a new home. So you need to be thoughtful about what is the margin target for each of the job mixes we're doing so that we can have an overall blended margin where we need to be within our business, and then how many of each jobs matters as well. But there's more to it than just using the right pricing strategy. It's understanding the business model, understanding the job mix, and where you're trying to get to. But the truth really is that the net profit is low in our businesses because our average gross margin is low. And you have enough revenue and projects to make much more money if we can understand the business side of the business a little bit better and process and manage that a little bit better. So I hope that was helpful for you. If you have any questions, there's a contact us link in the description below, or you're welcome to reach out to me. Here's my information. I'm happy to share with you the allocation key or help you understand markup and margin or job mix a little bit better, whatever I can do to help. I appreciate you watching and have a good day.